23rd of March 2023. 23rd of the 3rd, 23. Not quite the same back and forward, but you know what I mean. It's good to have you on board. Hope you're having a good week thus far. If not, let's see if we can improve on that. Bit of a non-event week this for me so far, apart from the gold trades, which are going okay. Let's dive in and see what we can find. Best change that screen to that screen before I do, however. Righto. As always, hi, Paul P. How you doing, mate? As always, if you've got any questions or something to contribute to the show, you are more than welcome so to do. And you simply do that by putting a question or a comment in the chat. And from that point, we will say g'day. And if you want to come on screen, happy days. If you want to share a chart, if you want to do whatever you want to do. Well, you can't sing. Every time I sing, I get in trouble because of copyright on YouTube. Anyway, we're looking at gold. Gold's had a pretty damn good run. I don't think yesterday did anybody any favors, unless, of course, you took profit at the lows here because it just took off and went in the opposite direction to where your entry would have been. That would have been the high, that would have been the low, and you would have been entered to the short side. And I've got no idea where the pivots were at that point. But yeah, you would have to have been fairly nimble to save yourself there. Monday, Tuesday, however, pretty damn good to the downside. And hopefully you got on board. Righto, what have we got today? We've got a high here. We've got a low here. Is that low? 0200? No, it's not. That's the low there. Let's line them up. That's Tokyo open there. I think it is. Daylight saving changes get me all the time. And, of course, they've done that in the States. We're doing it in Australia on Sunday week, and I think the UK is 2 weeks after that. That's when the time of this session will change, when the UK changes, but not before. All right, there's our high. There's our low. Come down here a little bit. I like it when we're in the middle. I don't like it when we're trading straight into a pivot. I've got DR1 marked here and the daily pivot. Both are foreboding trying to trade into those. However, should we do that? And if so, or if not, it's tough to go short here, I've got to say. Really got to say that. But we're not adding filters, as I say, every day. So what we will do is simply play by the rules. The rules at the moment do not include filters, as I said. So we'll go long above here, we'll go short below here, and close our eyes, because I think it'd be a pretty rough ride. The take profit has to be the weekly pivot for the downside and DR2 for the upside. So that's pretty clear. Let's put them in, shall we? We'll start with the buy. And again, very, very small risk on this because it's unproven. Although I've got to say I'm far happier with this than I was with the pound. It's doing far, far better things. High of the range is 1983. Let's make that 1984 for our entry. 1984, and the stop loss, which will be the short entry as well, 1965, 1965. Take profit or the sell will be the weekly pivot, as I said. We'll go a little bit above that. We'll use the high of that bar there. 1952 will be our first take profit. Well, will be our profit, sorry. There's no first take profit. It's all out at that point. Oh, invalid stop loss. 1984, 1965. Okay, that's why it doesn't make sense. 1965, 1984. I've got it around the wrong way. But you knew that, right? And 1952 is the thing. Oh, my godfathers, let's go a pending order, buy stop to sell stop. Try again. Hello. Righto, we got that one. Now we've got the long, which will be the reverse of that, of course. So that's the sell order, Daryl, yes. This one would be the buy. Buy stop, not buy limit. So we'll go pending order, buy stop. Anyone remember the level? 1984, right? That's a George, what's his name? Oh. In 1965 will be the stop loss for the long take profit. DR2 is not going to show me what the level is. Come on, show me. Okay, don't. Let's go with the whole number, 2000. Okay. Orders placed. Once again, I don't think there's anybody new in the room, so it is inconsequential for me to warn you that this is not a proven system. However, I can remind you that it's not a proven system and you should be adjusting your risk accordingly. Righto, so entering long here, we're ignoring DR1, may potentially at our peril, and taking our profit just below DR2. We are ignoring the daily pivot and taking our profit just above the weekly pivot at 19, whatever it was, 51 or 2. Righto, that's gold. Now, let's move on to something a little more complex. I think the only order or trade that I left you guys with on Monday maybe was dollar CAD. I think so. Well, dollar CAD's had a little bit of a upsy downsy ride. I like this bar here. After I got tipped in, I didn't like it at the time, but when it turned up, I liked it because we came back off the weekly pivot, giving me a reason to think off a trade line here. Those of you who know slingshot candle patterns will recognize this one at a nice frequency of test. So I placed this is a 4-hour chart. We were short, right? Dollar CAD on daily, but I placed an alternate order long above this bar here. Interesting, isn't it? You can swear sometimes they're looking over your shoulder. And we got tipped into the short, we got tipped into the long, and then, of course, we had FOMC overnight, and there's the bar from FOMC. Since then, we've wiped out that indecisive bar from the Fed, and now we're back at the bottom of this range. So I lost a little bit of money on the long. I closed it about here somewhere for a very small loss, no big deal. And now I'm probably looking at a retest of this trade line and hoping that it does clear this area here and give me some profit. Look, I've got very small stakes on this, so it's not the end of the world, whatever happens, but it's a mess, frankly, at the end of the day. The reason I wanted to go short was that I thought we had a false break on our hands of this horizontal level. So break above, back below, retest, enter there. But price has done absolutely nothing since. So a little bit frustrating on dollar CAD. Whole lot of other stuff going on. You'll, of course, know that I'm a massive bull on CAD Swiss. Actually, that's incorrect terminology. I wouldn't say I'm a massive bull. What I would say is that I see a currency pair who is at all-time lows and really, to my mind, shouldn't be going much further short without a great fight. The fight's there, I suppose, but gee, it's not great, I've got to say. And working this out, how I can get long again. I've been long, I think, 3 times. I give one little profit, one break even, one loser. And now we're back at that breakout level, or have we broken back above it? And that's the question. There's the level, closed above it, retested it. That looked like a false break to me. I did place an order long above that bar, stop loss there. Of course, no entry, and that expired. I'm still looking for a buying opportunity here, but gee whiz, it's a tough one to catch. There's nothing there at the moment, that's for sure. And I'll be leaving that alone for now. Euro Aussie, looking to trade that short. Reason I'm looking to trade that short is I think it's at a ridiculous level. I shouldn't say that. I get a little bit carried away, don't I, with these expletives. There's no question that this level is a valid support and resistance area. Support all the way through here, resistance all the way through here, and here we are again. Thus far this week, we've tried to break through that and currently failing, yet we're not back below that level. So daily chart's not giving me a trading opportunity, obviously. I need to see a reversal and a lower high before I can do that. 4-hour chart, as we drill down, is not giving me a reversal at this point. So I'm going to have to wait here until I do get something that makes sense. I don't know if I want to drill down into the smaller time frames, but I am keen to get short this. It may be next week before it pans out. The reason I want to get short is because of that level that we're at, and I think it's overcooked to a degree. So I'm looking for a reversal on Euro Aussie. It's not forthcoming at this particular point. There's a whole bunch of stuff that I looked at this morning. I guess they're all going in the opposite direction. And that's not such a bad thing, because primarily I set up my week looking at the weekly charts. And if the weekly charts tell me that there's a directional bias and non-tradable at that point, let me go. I'll give you a for instance. I think at the beginning of the week we had, well, let's go Aussie Swissy. Aussie Swissy was the first of the, I think, weekly game changer bar. So let's start there. And what we saw was a game changer suggesting that we do go long. Now, this is very much a case of what's happened throughout the week. Can't go long there above that bar because you're at a super strong support level here. You would expect it to become resistance, right? So the most natural and logical thing to do for me is wait till you get a pullback bouncing off that level and look for a higher low based on the big reversal bar, not even a bullish engulfing bar. So really, to trade this in the direction of the game changer bar, you'd need price to get above this level and retest it. We haven't seen that. And this is very much a case in point for everything. CAD Swiss exactly the same. Euro Aussie, like I said, still waiting on this one to develop into something. Yes, it's pulled back. It's a game changer bar to the downside. So I'm all over it, but I have to wait for a setup, and it's simply not there. I think I'm just repeating myself. Everything's virtually the same. This is a little bit different. The game changer bar has played out to this point. So if you entered above that bar, which I wouldn't do, given the proximity to the monthly pivot, then you're probably looking okay, and you may well have taken first profit by now. The way to trade this for me would have been to wait for the break of the monthly pivot and pull back to retest it, then have a shot. But yeah, it's tight. It's really tight in there to get some profit in the bank. So that's kind of the theme that I've seen all week, and it's been very frustrating trying to find setups on the daily charts, which is where I live at the moment. given that I can't afford the time to trade 30-minute charts. Yet I'm drawn today to this one. And I think I say this every single Thursday, right? If the euro dollar has not tested the daily pivot, then that's where my focus lies. The better part about today, I suppose, is it didn't test it on Tuesday, didn't test it on Wednesday, and here we are at Thursday, and we're flying away from it. Excellent. Exactly what I want to see. What I would really, 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 really like to see is for it to hit DR2, which is right here. Reason is it equals, this actually we're at DR1, that might be good enough. But DR2 is bang on the high here. DR1 is bang on that shoulder, if you like. Well, the previous swing high before the high. So I'm dead set keen to get short here. But again, I can't do it without a signal from the market. The market's got to tell me double top, evening star, head and shoulders, anything that looks like a reversal. And then I have to have confirmation after that. So it's probably not going to happen anytime soon, but that is most definitely on my watch list. There's not a whole lot more, apart from all those weekly game changer bars, which haven't played out yet. If you want to know what they are, look at the Monday replay, or if we run out of things to say in this session, I'll go back over them again. But there's a stack of them, and thus far, only one or two of them have gone in the direction of the candle. Most of them haven't triggered to the other side, and that's why I'm waiting on things like this, which looks to be extremely overcooked, right? Looking for it to turn around and pull back. Euro dollar, back to the daily pivot, it's going to be the flavour of the day for me. And the higher it goes, the better I feel. Hello, Ash.
Hi, mate.
How you doing, bud?
Yeah, very good. Very good.
I hope you've had more action than I have this week. It's been very, very boring, apart from the gold breakouts.
It's been a tricky week, actually, and some of that is that I think the market expectation just didn't play out. We had Jerome Powell out yesterday, and because of the banking crisis, they've changed their tack, but not sufficiently, really enough to give us a really positive kind of spin on the market. We've had obviously crazy inflation numbers from the UK as well. So we got really high inflation from the UK. We've got a very hawkish sounding Christine Lagarde, and now we've got a Jerome Powell who he just sounds confused. He just sounds like he doesn't really know what the best course of action is going to be, and the language.
I don't think I'm surprised at that.
No, I mean,
you've got to be a bit of a wizard to work out what to do next, I would think.
Yeah, the interesting thing, though, I think, is that Christine Lagarde was quite certain. You know, when she kind of like gave her press conference, she was quite direct in her messaging that the banking crisis is not a crisis. It's not as bad as people think. There are enough tools to kind of make sure that they can alleviate the issue in the banking sector. And therefore,
is that a bit like Trump saying that they've got nothing on me?
I don't think so. No, I don't think so.
You think she actually really believes that, right? Okay.
Yeah, I think they do, and I think they've probably got the tools that they need, and also they haven't had that long to reduce their balance sheet, but they have been reducing their balance sheet. So it's possible that they could increase their balance sheet and still not raise interest rates. So they've got a couple of different scenarios where they kind of they do something quite dovish, but stay hawkish on the interest rate side. So the one thing that the thing that people are expecting is this kind of binary response to the banking crisis, and they think that there might well be a lowering of interest rates because they will need to go and save the system. They're going to go and need to save the economy. But what they obviously can do, and what they seem to be doing, is adding liquidity to the banking system. So yes, printing dollars, and probably the ECB may well be doing the same. But definitely the Fed printing dollars and adding liquidity to the banking system, so increasing and buying obviously sort of banking debt and bonds and stuff. So increasing on the balance sheet, but at the same time leaving interest rates high. So they've kind of got this this two-pronged odd thing going on, where it's not really an attack. It's like a one attack and one defense. But it does leave the market in this state of confusion. And Jerome Powell's statement really kind of says the same thing, that they're just a bit confused. You know, one thing that he did say that I thought was quite possibly significant is that they could tighten the monetary system without raising interest rates. He didn't really go into that much detail on that, but I think it was to do with sort of like, you know, the balance sheet runoff and things like that. So it sounds like they are close to the end. They did suggest that the federal funds rate band has gone up a bit. I think from 4.9% to now 5.1%. And also, he also said that anybody thinking that we're going to be lowering interest rates this year are for the birds. It's just not going to happen. You know, given the current financial situation, it's just not going to happen. Tight labor markets, relatively kind of bubbly economy that is showing some sort of positivity in one areas and negativity in others. Banking system which is failing right now, and the banking system was pointed as a reason that they only went 25 basis points, but effectively he's saying inflation is the key. We are going to get inflation back to 2%, 2 to 3%, and if the way that we're going to do that is by raising interest rates. If we hadn't had this banking situation, we would have gone 50. So in a way, one of two things, this is where it does become potentially quite binary. If the banking system manages to sort itself out relatively soon, which seems unlikely, but let's say it does sort itself out relatively soon, it becomes stable, and everything else remains the same. So tight labor market and an economy which is still, you know, producing positive GDP, even though it's only just a little bit, then inflation remains high, then there probably will be a push towards potentially 25, but maybe even a 50 basis point rate hike next time out or the time after. If the labor market gets loose, so this is the other side of it, if the labor market gets loose, so everything else remains the same, but the labor market gets loose and inflation starts to edge down just a little bit, then I think the pause is probably in. And maybe, you know, the stuff that he's saying about no chance of reducing interest rates then does also change, because he was quite clever well, maybe not clever, but cautious to say that as things stand, that is not going to happen. So things will have changed if we get a little bit less inflation and we get a looser labor market. That's the key. And actually, because that's the key, today's release is pivotal. You know, we've got the
BOE, right?
No. The US labor market is releasing data today, so that's going to be watched quite closely.
Riddle me this, because you know, me as an economist is like, I don't know, Donald Trump being a ballerina, perhaps.
Yeah,
we just not the same. So I use logic rather than economic data. What you've just described to me is a case where the US are going back into a money printing scenario, yet that's only for the benefit of the banks, as I understand it.
Yeah.
Yet, at the end of the day, the more they print, the more they've got, the less value it has to be. The more dollars in circulation, right, then it has to lessen the value of the dollar.
Yeah.
The way I think.
Yeah.
Yet we've got inflation, which obviously you just mentioned. They are intent, or even more so, in getting under control, which means higher interest rates. So I'm assuming that we've got a money tightening situation from a monetary policy point of view, and yet we've got a monetary easing point of view to a certain sector of the economy, if you like,
Yeah.
aka the banks.
Yeah.
How on earth are they going to work that out? No wonder we're confused.
Yes, exactly, Mo. And this is exactly why the market doesn't really know what's going on. And I'll show you my charts, because actually it expressed itself actually pretty nicely in the charts. Doesn't help any of the trades out so far this week, but you know, that's just the way it is sometimes. And you know, we take these positions on complete speculation, and that speculation is not necessarily driven by the state of the economy right now. It's driven by the if we're short-term traders, it's going to be that the state of the economy, or the central bank's address on the day, and you don't really know what they're going to do. Now, if we have a look at the chart,
to me, we're actually putting band-aids on big problems.
I agree.
And the band-aids are going to break. And at the end of the day, why don't you just let the market sort itself out?
Well, yeah. Well,
survival of the fittest, if you like. Let me put it that way.
Yeah. Do you know the big problem with that is, if it was just about businesses, you could do that. But because this situation really, I mean, I suppose you could just leave inflation where it is, but this situation is also affecting everyday people that took out mortgages, and now all of a sudden those interest rates are going higher. They're struggling. If you don't,
do you know what we're saying though? What we're really saying, and I mean, I've been a mortgagee for most of my adult life, right? And so I've been through 18% interest rates. I've been through all sorts of scenarios throughout my life with borrowing money. But, you know, my parents and their parents before them and their parents before them never had a thing unless they could afford to buy it. And, you know, we've created this hole for ourselves because we're the must-have people. We've got to have it. And it gets worse and worse as the generations go on. Not only have they got to have it, they've got to have it now, or they've got to have it yesterday, without any money on the table. And there's only really, at the end of the day, one thing that can happen there, and it's not pretty. It's just not pretty. So we've only got ourselves to blame. Let me put it that way. Do I sound old, Ash? Do I sound like an old codger?
No, you don't, mate. Do you know, the only thing that I would suggest with that, though, is that back in your parents' time, particularly, your job would have paid for your mortgage and your house within 5 years. So it was a lot easier.
No way. No way in my parents' time. Shit, no.
Maybe maybe it was that maybe the States was different, but I know that you could I know that your mortgage was nowhere near what was a house in the States. Maybe it was like $5,000 or something, but I know that your house price was nowhere near the astronomical difference that it is today. You know, we're not
in terms of
value to wage. You know, yes. your wages were able to afford your payments. Maybe 5 years is maybe sort of overstating it a bit, but it wouldn't have been a situation where it would have taken 25 years. You know, many people would have had a decent enough paycheck and a lower enough house price to be able to pay off their homes, their home value, a lot quicker than they can today. So part of it, yes, may be this kind of instant gratification aspect, but part of it's also that money just doesn't go as far for certain things. So borrowing becomes the way that we've almost been pushed there by the banking system. So yes, people do sort of like seem to want more, but they have been directed in that direction because the banking system, that's how they make money. and assets are a lot more.
It's a wonderful business model, isn't it? At the end of the day.
Yeah, well, it is, and it's breaking right now. Now, interestingly, so this is what was going on yesterday. It was really interesting yesterday because we had this situation where Jerome Powell was a little bit woolly.
Sorry, I got off track, and I shouldn't do that.
No. Well, you didn't, mate, because actually this is all an aspect of figuring out really where we are today. You know, sort of figuring out where we were. And I even though I think people have changed in their outlook, I also think that that's been caused again by the greater powers. You know, the greater powers have really pushed people towards a specific situation where borrowing is really the way to get yourself up the ladder, where it wasn't before. It wasn't about borrowing. It didn't need to be, is my point. Not quite as prevalently as it is now. And actually, the people that did borrow back in those times probably did very, very well because they realized that that was the better way to play the system, because, you know, it was probably a lot easier to pay those borrowing costs off now. But it's a lot more difficult in this particular era. And this yesterday, what we saw was Jerome Powell kind of coming out and intimating that actually this was sort of like during that period where he was almost saying we might not need to raise interest rates too much further to control the inflation narrative. So the Nasdaq started to push higher, but what was coinciding with this was a address by Janet Yellen, the Treasury Secretary, to Congress, and she was effectively saying there's going to be no blanket insurance. That was her exact words. There's no blanket insurance to protect all the banks in the US. And then we saw this, and the market just tanked, and it tanked across the board. This is the Nasdaq. This is the DAX. Same thing. Bang, down to the downside. This is the FTSE. Bang, to the downside. And this is the S&P. So all of them dropped significantly. Now what we've got is this edging higher, and this is where things become difficult because technically speaking, it suggests that we should be looking for selling opportunities here, selling opportunities here, and maybe even selling opportunities at the highs. It might be getting a bit late by that time. But this is all by all intents and purposes, a big momentum move down and then a retracement. So people are looking for downside. However, this retracement is a lot more sends a relatively significant message, in as much that we shouldn't be getting a retracement. You know, if there was this big problem in the system, this should have just gone boom, and maybe like with a small one, it should have gone bang again. But it's not. It's climbing back up, and I don't know where this is. Maybe 50%. I've changed my fib tool, so I don't know whether it's going to give me no. It's probably sort of like within a 50% range. You could probably sort of like do it on 80.
Oh, look, mate, you can make it 50% if you want. Just put it on anywhere in the chart. That's how fibs work, right?
Yeah. Well, that there is 50% actually.
That would be for sure. Yeah.
We're edging towards that particular point, and you know, there's a chance actually that we go higher. You know, I remember saying on Monday that I wasn't bullish on the market, but I was a buyer. It was a much more of a buying scenario, and really that was because, and that's not sort of like trying to say, you know, I get things right, because my goodness me, have I got the dollar CAD wrong? But when we sort of like talk about this sort of thing, the reason that I was sort of thinking that market could go higher is because I thought, well, the banking situation sounds to me a little bit overblown. It sounds like, you know, the market may have got a little bit ahead of itself. And sure enough, we did sort of like see this situation where things calmed down. There was enough relief. But now we've got Janet Yellen saying maybe there's not the relief that you think there is. And we got Jerome Powell sort of saying something different. And the problem is they kind of suggest that Jerome Powell sort of suggests that we don't talk to each other. What we do is what we do, and what the government do on the fiscal side is what they do. Now, of course, that's rubbish. You know, they must sort of like have some sort of, particularly because Janet Yellen was in the Fed, so she would have her mates.
But then on the other side of the planet, you've got what's her face, blonde lady,
Christine Lagarde.
Christine Lagarde, saying just the opposite, saying everything's fine, everything's rosy. Yeah,
and this is where the market is very, very confused now. And this is why I'm not particularly bearish when it gets here. because the confusion is so heightened at this particular point. This could still go either way. And we've got a situation now where we've got the labour market. So we got the Bank of England, we got the S&B out in, actually it's just released. Let's have a look at the Swissy. Swissy is showing some signs of strength because they raised interest rates by 1.5%. Up until yesterday, the expectation was to leave it on hold. They've now raised interest rates to 1.5%. So they're now going.
Oh, I thought you said by 1.5%. Holy dooly.
Yeah, no, raised it to 1.5%. So 50 basis point rate hike. And let's have a look. The CAD showing some signs of weakness. CAD yen. Oh, sorry, not CAD yen. Swiss yen showing some signs of strength. But you know, difficult market really. Down, 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 then springing to the upside. You know, nothing really clean there. This was probably the best opportunity. Well, maybe just about.
Thanks, Tajul.
Yeah, slight higher low, that one, but you know, difficult to trade this. But S&B have just raised. We've got the Bank of England out in another 4 hours or so, 3 hours or so, coming out with their interest rate. But the big number really, even though we've got all that stuff, most of it's baked in. The big number really is going to come from the jobs market from the US. Continuing jobs claims out half an hour after the Bank of England released their data and their decision, and jobless, the jobless claims 4-week average. So there is labour market data now. That is pivotal. Again, it's always pivotal, but it really is pivotal after an interest rate announcement because Jerome Powell was that little bit woollier about what's going to happen. If the jobs number starts to jump, jobless claims starts to jump, then we might start to see the S&P rally, the NASDAQ rally, and other risk assets rally. If that remains tight, things are off the table again. And what do? I guess you could look for a selling opportunity, but it makes it very, very difficult. So Swissy looks like it's a rallying market today. Actually, looked okay in the end, didn't it? So Swissy is. I mean, that's a very difficult.
As you said before, all of these currencies or countries who have held their interest rates down are now playing catch up.
Yeah.
And 0.5 trumps 0.25, right?
Yeah.
It's not rocket science at the end of the day.
Absolutely right, mate. And so that should actually boost the Swissy higher. This is the one that I've been after for some time. The dollar CAD, which I presume you're probably. Are you triggered in this yet, mate?
I am in. Yeah, I've been in all week. Yeah.
Brilliant stuff. I mean, I still like the look of this.
I don't know about that. I'm struggling with it. But...
Well, it hasn't gone anywhere yet. To be fair, I think that the pattern that I was following, and I got a really nice setup as well. But the pattern I was following was this one here. And it was on the 4 hour. And when I saw this breakdown here, I was in short on this one, but then boom, look at that, straight to the upside, give us a higher low. Same. Yeah, but now we've got this situation where we've got this double top here, a break back down again. Really, I mean, obviously you're gonna have to put the this trend line in a slightly different place now, probably there. So it does need to break down this point, but I'm still interested here. You know, I'd still be interested in selling this off. Let's see if we can tighten this line up a bit and see what we can get. Where is it? Very difficult to tighten it up, actually. There we go. That's probably about the right place. So I'd still be interested up here. You know, if this does come down, then I'll move the stops at the high. But you know, this again managed to just poke its head a little bit through that top bit. But this is during the Fed decision here. You know, and
I actually played a long hedge before the Fed decision.
Oh, well done, mate.
It wasn't because it didn't work. Okay. But I got out. I got out very, very quickly. So it only cost me a couple of beers. No big deal.
Oh well, yeah, it's not too bad. Yeah, and that's the Fed meetings are really, really difficult. And I think, you know, when I was halfway through my hour yesterday trying to trade the Fed stuff, and I was down. I don't know what it was, but it was definitely, you know, it wasn't significant, but it was a couple of percent. You know, while the meeting was going on, and and I just managed to kind of get into the Nasdaq short and the DAX short to kind of recover and get some money out of it. But after I was thinking, actually, this is too difficult. You know, it's a really difficult period.
Yeah.
If it goes your way straight away, you're fine. But it does. There's lots of volatility, so it goes one way, then the other way, then one way, then the other. Sometimes it just goes, and that's what you're really after, because you know if you've got into a position during the Fed meeting that's correct, you're making money fast, and
Yeah.
probably quite a bit of it too. So that's
I
why
mean,
we trade
if
it.
we're completely honest with ourselves, that chart's just a mess.
Yeah, it's a great mess. Yeah, total mess, mate. Total. But the only thing is, I still have levels, along here that I'd be happy to try and trade short.
On
And it's
smaller time frames, yes, understand.
yeah. This is on the 4 hour. I'd probably pick it up on the 4 hour, because the hourly would suggest a little bit lower. But I'm not prepared to pay that price. I think this price here would at 1.3697 and above, I'd be okay to try and attempt to trade and pay that price. But I wouldn't be paying less, I don't think, to try and get into this trade, because it's now become a bit more speculative seasonally. Pound strong, CAD strong during the April month, dollar weak, so it does suggest downside. Does bring us kind of onto things like gold, which again, very interesting really what's going on with gold, because even though this is about inflation, it also became, this bit was really to do with the banking situation, the concern that that people's money was potentially going to get swallowed up. Then we've seen this grind lower, and I think the grind lower was probably because we started to alleviate some of those concerns. But now we've just seen this big move back up again, and this is probably because of dollar weakness. So, the gold chart, lots of these charts are just very, very difficult to not only read but get involved in, because this area here, you could see it as a bear flag, or you could see it as a tower bottom, but there's been no pullback to kind of get you involved. The bar just seems to take off from these areas of support right now, or these cluster points on the chart. So difficult, mate. It's a very difficult environment, I think, to trade right now. And even though directional kind of biases are not quite as difficult to find on shorter time frames, holding on to those positions is tricky.
Yep. Talk to me about the yen.
Well, I think maybe
it's had a little bit of a sweet few days, or maybe even a week or so. But
yeah,
can you trust it?
No, I don't think you can, and also I think that the yen, the narrative of concern in the market is playing into the yen's hands. We've seen the kind of yen strengthen over the fears in the market, rather than kind of monetary policy, because monetary policy is not looking like it's changing. And I think if a pause is now, effectively imminent from some of these central banks, then there's a decent chance that the yen starts to weaken again, because they probably would feel like the pressure's off. That one of the big problems with Japan is that they are at risk of allowing their currency to go too low. They want it low because it kind of increases trade, but they're at risk of it going too low, where they're kind of importing inflation. But if the other central banks start to pause, then we might start to find this new level where the yen manages to kind of trade in a band, a lower band, but it's still kind of trading in a band rather than continuing lower. So with the other central banks maybe now getting a bit more dovish, it probably takes the pressure off the BOJ. Yeah. So and plus, if we start to kind of get that dovish kind of form from the other central banks, then there's also a chance that the market calms down and the yen doesn't become that kind of fear trade currency. So
yeah, I've got an order on this pair
to go long.
Yep.
Yeah, I think that's probably the right way, mate. The dollar's not particularly attractive at this stage because of all the confusion. But something like the Aussie yen, I think this one probably would look a bit better. The price action needs to improve, but this one would need to, this one would be quite interesting. I think maybe CAD yen as well could be another currency pair that would be interesting. Nice area to try and get involved in. You know,
All
on the
the com
dailies.
dollars, the Kiwi's the same, you know, and Euro's the same as well. All against the yen.
Euro trickier because the euro does have this this banking situation going on, and you know, there's no question that the euro is a bullish currency if you think about the narrative from the central bank, but it's still a very dodgy economy. Economically, it's not in such a good position as the likes of the CAD, the Aussie, and the Kiwi.
Yeah, I should probably tell you about that position on dollar yen. And, you know, I hate dollar yen. I think it's a dreadful currency. But if you want to go back to that daily chart, boy, oh boy, if you overlaid the sentiment cycle, it's not far away.
Interesting, yeah.
It's not far away. And I think that may well be an inversion point. It's certainly a higher low on the back of that double bottom sitting there, no question. It also looks potentially like, maybe not on that chart, weekly chart may look like an inverted head and shoulders as well.
Yeah, a little bit.
Yeah, not quite. It's not pretty.
No.
But if you're interested, guys, and you want to follow what I'm doing, I'm long at 1 pip above 133. So my entry is at 133.01 on the daily chart. Yep.
Yeah, it looks actually more like a head and shoulders on this weekly.
It does, doesn't it?
Yeah, but I see why this area is a potential reversal.
Yeah, it's a nice horizontal level.
It is actually, yeah. This is the
and
head and shoulders here.
And I've got a channel going up there as well. And we are at the bottom of that channel right now. So I think it's a buy zone where we are.
Yeah, I agree with that. It's definitely a buy zone.
Yep, that's the channel. And 133.01 is my entry. I've got a stop loss 252 pips below, which is below the swing.
Yeah, do you know, interestingly, mate, really what seemed to happen yesterday was that, I mean, we did get sort of some weakness in the dollar. We seem to be almost, we seem to have sold off into the decision. And actually during the decision, you know, the dollar was sort of like trying to find some strength and trying to find some footing. But as soon as
we'd priced in half a percent, right? That's why it sold off.
Well, I think it was more the statement, you know. I think it was more of, because it's really about sort of like, you know, what's going on in the future, what they're gonna do from this particular point. And when we sort of heard from Jerome Powell, because he was so fluffy and just didn't really kind of give any specific idea of what they're going to do next, apart from them saying, you know, we're going to fight inflation no matter what, don't get too excited. But then the same token, effectively, you know, saying that the banking situation did change their idea of what they were going to do next, and there were other tools that they might be able to use instead of raising interest rates. So he really did. He created a lot of uncertainty, and I wonder whether what we've really now ended up with is a dollar that strengthened a little bit during the rate sort of decision, and now is kind of going back to trend, or it will go back to trend. Well, it did really. If you look at that, this was in a downtrend, and it continued to the downside after that. The Aussie, you know, yesterday, Aussie dollar was moving higher, and all it's done really is sort of like continued on that particular theme. Obviously, the dollar Swissy is going to be strengthening. Pound is in all sorts of a strange situation. Another economy that's not great, but inflation is just unbelievably sticky. I mean, you think about any other economy, nowhere near the same problems that the UK's got with inflation, over 10% and rising is the big issue. So the BOE today, I think, would be speculated on going 50 basis points undoubtedly, and possibly even saying something quite hawkish. So which would be really against their grain. I don't know if you remember, but only a week or two ago, we had Bank of England members coming out and saying we shouldn't be raising interest rates anymore. Now we've had this data which basically says you've got to raise interest rates and you've got to continue to do so. So the Bank of England, I think, and the pound particularly, is the most dangerous long out of all of them.
There's a theme here, right? Nobody's certain.
No.
That's the theme.
No.
The theme is uncertainty. And guess what that means?
Opportunity.
And markets don't like uncertainty.
No, well, they don't, mate. Do you know, interestingly as well, the crypto market has seemingly decoupled to a degree from the rest of the markets. And the crypto
what's that
market
doing at the moment?
Well, it's really picking up. I can show you some. I can show you some charts on the crypto stuff. Let me just see.
Well, that's going to struggle to get through that high. What's that, pound? Right.
Yeah. Pound is in a bit of bother. Right. Let's have a look at a few of some various.
Great range forming there. Like it.
Well, on the pound.
Pound short when it gets to those highs.
The pound may well weaken after the rate decision. It'd be a tricky one to trade in a lot of ways because the inflation narrative doesn't suggest it should weaken.
As I say, I'd like to see it burst through those highs and then come back off them. That would be a nice selling opportunity.
Yeah. So this is Cardano, and we seem to have got through this level now here, and create this inverted head and shoulders. So Cardano is looking like a reversal pattern to the upside, looking relatively.
Remind me, what's Cardano? It's a card or something, is it?
No, this is a crypto. This is an exchange, a crypto platform. So like Ethereum is, one of the Ethereum supposed Ethereum killers. And we got the Bitcoin, obviously. I mean, I'm just going to look at the top 5 or 6, or one of them. Let's go BTC USD. Again, inverted head and shoulders kind of coming in on Bitcoin, which looks like it's kind of starting to play out. And I think this is quite interesting, really, with the crypto market, because the market is kind of has a lack of confidence. Is this moving because people are starting to have a concern about the banking sector, and they're trying to find sort of a different way to kind of, a different place to kind of park their funds? Because if that is the case, then it's possible that that the crypto market actually does have a new role to play. It actually sort of does what it was designed to do.
Yeah. Or
so
it simply had a bargain price.
It could be that.
How can I say that it's $20-something thousand?
Yeah.
Wow.
Well,
bargain.
That's
in.
Bitcoin. This is Ethereum as well. It looks like it may well have formed a bit of a bottom down here, but you can see that there's a theme here. I mean, they're not very clean, but there are inverted head and shoulders with quite a lot of these. Now, these are obviously reversal patterns that we know, reversal areas that we know. So there's the inverted head and shoulders on that one. And that's just got to get through the neckline. And
if it breaks and retests that level, that's very strong.
Because,
look to your left. That's strong support before.
Yes, absolutely, mate. Here. Yeah. This is just along there. It's a pretty strong level, isn't it?
What's this? Ethereum.
This is Ethereum. Yeah, but I think what we'll see is a lot of these altcoins kind of starting to do pretty well. XRP is another really interesting one, because XRP is the cryptocurrency that the SEC are hell bent on going after, and we've seen these are all weekly charts, but if you were to start going down to some of the other kind of lower time frames, which we can, let's have a quick look on the daily on this one.
XRP. Is that Ripple?
This is Ripple, yeah.
I've heard of that before.
Yeah, I think this is another really interesting cryptocurrency, because these guys do seem to have some power, and they're quite happy to take on the SEC. I think they won a court case yesterday against the SEC. So the
Really?
SEC,
Wow.
yeah, it was I don't know. They presented some evidence to a judge. I can't remember all the detail, but the judge effectively said that the SEC don't have a particular case in this example. It wasn't purely about the security aspect; it was something else. And the judge threw it out. So the SEC, Ripple managed to beat the SEC. So they've got some clout. These guys have got some clout. They seem to have quite a bit of power. They are arguing that they are not a security. The SEC are trying to put anything which is has a third party interest in it as a security. So it's going to basically put so many different cryptocurrencies under that particular parachute that the crypto market will be in a bit of bother if they manage to win. But the SEC don't sound to me like they really know what they've got their hands on, and they don't really know how to approach it. So the crypto market
I'll bet there's some people working furiously trying to work that out, however.
Yeah, they definitely are. They're making all the right noises. But what was interesting is that you start to wonder whether they've lost their opportunity, because while the crypto market was tanking and people were losing faith in it, that was the chance to kind of really put the knife in and see if they could kill it off. But they haven't really been able to do that with any sustained success. And now we might be starting to see some green shoots of recovery. So I'm wondering whether the time to get back into these crypto markets has arrived. If you look at these on longer term time duration, so if you look at this on a monthly chart, you can see that hugely volatile. But we are really so close to, probably on it actually, so close to this area of support here, which was resistance here. So we do it does look like we do have a reason to suggest that this is a floor, and we're just waiting for maybe some positive price action to take off. And the daily chart suggests that we might have found it, mate. So could be a point, could be a chance to get into the crypto market. Look at BTC on the same.
I'll be okay. There's people doing that for me, so I'm okay with it.
You're right with it. This is the Bitcoin's floor. It hasn't quite reached the floor on that one, but maybe close enough. But it's already doubled in price. If you think about this low here, close enough anyway. You think about that low there was at 15,400. We're now at 27,000. So we've almost already doubled the price. And actually at some point, we didn't quite get there actually, but we're not that far away from being up 100% on Bitcoin in the matter of 5 months. We have the halvening coming up next year, sometime between, I don't know, February and when they decrease the amount of Bitcoin that can be mined by half.
Oh, okay.
Which
sounds like something very, very dark.
Yeah, well, it's another bullish event. So really, sort of, if we think about the potential protection of your money, then the crypto market has to play well. It's an option to kind of play a role. The gold market, we know, is another one of those options to play that role, and we've seen what's happened to gold over the last.
Re-rack a little bit. The halvening.
Yeah.
So what you're saying to me is they're going to halve the amount of Bitcoins that are able to be mined.
Yeah.
And there was a finite number of Bitcoins in the first place, right?
Yes.
Which suggests to me that only half or less than half of the available Bitcoins have been mined to this date. Would that be right? Is that logic?
Yeah. So I'm not sure how many are in. We'll have to have a look at the supply, but they haven't all been mined just yet. No.
Okay, so logically, if you've got, let's say you've got 100 Bitcoins, that's the limit. and I
Yeah.
don't know what the number is, but let's say you've got 100 and 49 of them have been mined to this point. And at the halvening, whenever that is, there's now only 50 available.
Yeah.
Therefore, we've only got one to go. Am I reading that right? Doesn't that double the value of Bitcoin instantly?
Okay. So just to put some context, the maximum supply of Bitcoin is 21 million. The circulating supply currently is just over 19 million. So we are closer to sort of, you know, so the amount of because when it started, a lot of them were mined, you know, very, very quickly. And then the halving came in, and sort of like less of them could be mined. So as we get closer to the limit of supply, then it's harder to kind of get those Bitcoin out the ground. So already sort of a lot of, you know, most of Bitcoin is already out there.
Go on. Okay, let's talk about something else.
Well,
that's insane to me. It just doesn't make any sense. But that's fine. I'm an old codger.
Well, I suppose the only sort of maybe a better way to think about it would be, let's say gold. You know, let's say that there were in possible kind of existence, there was only going to be I don't know, 50 billion tons of gold. Or in fact, let's make an easier number: 100 billion tons of gold on the planet. Mm-hmm. And every sort of 4 years, the regulation comes in to say that you're only allowed to mine gold for half the amount of days this, you know, in this next period than you were prior to that. And there's already 99 billion out there. So there's only 10 billion left, let's say. 10 billion.
Stop. Sorry. What that instantly says to me is that market is therefore being regulated, and we know it's manipulated. We know that, right? But the whole point of Bitcoin, to my mind, is to defrock that regulation, right, and get out there and be a free market, if you like, or at least, free market. That's probably not the right word, but to get rid of somebody saying to you exactly what you said to me, you can't mine more than this. So, hello. I'm struggling, mate. Really, I'm struggling.
Okay, okay. Let me think about it. Let's put it a different way. Let's say that that all the pickaxes that were initially bought by the people that could go mining for gold, the designer put a design flaw in the pickaxes, which meant that every 4 years they became that little bit more blunt, so they weren't able to do quite as much work. And that's how it's regulated. And then the designer disappeared, so nobody knows where they are, so they can't change it. It's already written into the design, so it can't be sort of like, you know, so at this stage it's kind of not regulated, because what's happened with Bitcoin is that it's written in the code and nobody knows who Satoshi is. So he's disappeared. The code can't be changed. So he's not, you know, ultimately he's not now regulating it. He just wrote it in, and that's in the code, and he's off. So same thing with the pickaxes. They wrote it into the design. That's what happens to the pickaxes, and nobody can do anything about it. So it's not really being regulated. It's not like every 4 years they say, right, this is what's happening. It was already written into the design.
Wonderful. Yeah, I used to sell pickaxes, right?
Why doesn't that surprise me?
For opal mining, I did. 100% did.
Yeah. I remember you telling me, mate, because you said that's where the money was. You said
that's where the money is. You got all these poor bastards. You got all these poor bastards underground. Chip, and their picks wear out, right? So they come in and buy another one.
you wrote it into the design, didn't you? So
they don't find anything. Well, it's the same. It's exactly the same, I suppose. So now it makes sense. Bring it back to pickaxes. I like that. What else have we got to talk about before we go? And I did interrupt you again. Sorry, mate. You're on a theme, I know.
I
My
don't think I
apologies.
was. I don't, I don't think I was. Oh, I think the only thing was that that people seem to be. I mean, you look at these emotive moves in some of these kind of protection assets, if you like. Bitcoin and gold particularly, and it is suggesting that the market is very, very nervous on what's going to happen. It's different, really, sort of like as people have been selling off the Nasdaq. What this is kind of saying to me is that they're buying the Nasdaq and buying gold at the same time, just in case. They're just not really sure whether there is going to be further problems out there, and really nothing's been cleared up. So gold is probably still relatively cheap down here. If we get more, well, we'll call them shocks, but they're not really them. They're not becoming shocks anymore, because the theme is seemingly now that we're getting one thing after another thing after another thing. COVID, okay, that was a shock. Putin invading probably was a shock as well. But how they've reacted really after COVID, and the hyperinflation, that wasn't a shock. I remember sort of last year or whenever it was, then they're saying it's transitory. There was a lot of people, me included, and I think you also, were scratching their heads going, really? Is that the narrative you're going with? So it meant they were very, very late on picking up the baton with that stuff. And so I guess what I'm saying is they've created a lot of the problems. And when things are created, they're not really a shock. So, what comes next? Is it something else in the banking sector? Is it something in the tech sector? Is it cryptocurrencies? We don't really know. But it does suggest, with the current trend that's going on, that something else is probably lurking around the corner, which again pushes us back to something like gold as a safe haven asset that doesn't look actually overvalued when you consider the world in that particular through that particular lens.
Yeah, look, I'm extremely pissed off that lower high has now been taken out, because it takes my enthusiasm to sell gold.
Yeah.
It's just not a thing now. I can't rely on game changer bars, because it's all over. I have to wait now for, I don't know, those highs are going to be tough to get through, but and I think we've really discussed exactly what's going on here. The market is in teeter-totter land. It's really not a sure thing anymore. It never is, of course. You can't rely on it 100%. But at the moment, I see nervousness, and that tends me to think stock market's not healthy, because the markets do not like this uncertainty at all. And therefore, I'm thinking the reverse of what I said before, which is, can you trust the yen? Can you trust, well, the Swiss is a little bit more trustworthy, I think, but it seems to me, when the market goes into this situation of uncertainty, that stock market selling, yen buying, Swiss buying makes perfect sense. Whether I think that's a medium to long-term philosophy or thesis, no, I don't think it is. I think we're in a very short-term scenario. So anything I put in the market at the moment, I think I'll be taking profit on pretty quickly and getting safe. That's my thesis at the moment.
Yeah, I think you're probably right, mate. I think the other thing, the interesting thing really about all this stuff is that you can actually, during an environment like this, you can look for quality, and that's what you should be trying to buy, because that quality is cheaper than it was previously. I mean, I say some of them, that with a pinch of salt, because the likes of Nvidia, what are they up? It's like 80% or something on the year. I mean, it's a crazy number. But Nvidia are obviously up because of the correlation with cryptocurrencies and the correlation with AI, more importantly, right now. So some of these tech stocks will continue to probably do very, very well, and they will do well because the next new thing that comes out, they will be somewhere in the supply chain of it.
Have we got any AI porn sites that are publicly listed?
That I don't know, mate. I don't know.
I reckon that'd be the most amazing AI experience for young people.
Yeah, well, yeah,
I'm not
and probably,
including myself, but I reckon that's a market that'll just go nuts.
oh well, yeah. To coin a phrase, yeah.
Pun not intended.
Yeah. Look at this, mate. This is Nvidia. So this is from the lows to where we currently are. God, I was lowballing it at 80%, 150% higher.
Oof.
From the lows back at the end of last year. So the lows back in November last year, we are now 150% higher. I mean, this is a stock. This isn't a cryptocurrency.
I was going to say, if you overlay the Bitcoin chart, this wouldn't be terribly different.
Well, you know, right now it would, because Bitcoin hasn't gone up 100. Well,
it hasn't gone up that far. No, that's true.
Yeah, I mean, we're talking about 150%, and we're talking about 150% of a stock that has got, you know, the argument against cryptocurrencies is that people don't understand the usability of it. And actually, it's not actually, you know, but into the common kind of into common life enough to sort of have major usability. But we're talking about Nvidia. We're talking about Nvidia that has usability because it designs the chips that allows AI to run. You know, and every time that there's a new sort of a new thing coming out, when the Bitcoin, when the crypto market was going on, this was the move in Nvidia. I mean, this is an amazing stock, and I keep missing the move on it. I keep missing the opportunity, but I always do want to try and get it. 600%, nearly 700% actually, from March 2020 right up until February 2022. So in 2 years,
wow,
this rallied 676%, and that was down to the crypto market, really, you know, because that was the same. If you compare the same period for BTC, BTC USD, and we were talking March 2020. Which was there until February 22.
Yeah, it looks so familiar, that chart. But as you say, it hasn't rallied as much as that Nvidia thing as well.
Well, I mean, this one between the same period, slightly before actually it reached its highs, it was up 2,000%. But I think the difference is that we're talking about a stock. You know, so yes. Nvidia was up 700%, and okay, Bitcoin was up 3 times.
What's its value? What's its market value?
The market cap.
Spot price. What's its price?
Oh, the price right now is $264.
Shivers. That's not a penny stock that's running that much. That's substantial.
Exactly. Wow. That's the point. And also the point is that we are headed for technological advancements. I mean, this is just a fantastic company. I've liked them for a long time, and unfortunately not. You
have been speaking about them for a long time, yes.
Yeah, and I just not got on board with it. You know, I always seem to kind of take my eyes off it.
From the low, that's a 618 retracement, right?
That I don't know. I don't even know.
Looks very much like it.
I've only just started to use TradingView again today, actually. So I don't. I'm not 100% certain where some of the tools are.
Yep. I was trading off it for a while, and I thought I was putting, you know, like one lot, and I was putting 10 lots in.
Oh, so you stopped.
Yeah. Unfortunately, it wasn't a winner either.
Yeah. Yeah, that would have been all right, though. You would have carried on there.
Yeah. So yeah, I stopped doing that.
Yeah, I can't find the fib, mate. But yeah, you're probably right. It does look like it, doesn't it? No, I mean, it's going to be in that area.
I can tell you. What chart's
it's
that?
Interesting.
Monthly.
Yeah, monthly. And it is interesting with the fibs, as you rightly say, mate. The interesting thing about the fibs is there's fibs everywhere. You know what I mean? So
Yeah,
you're
where are you
going to
going to
find
pull
a
it
fib
from?
somewhere.
Exactly.
Yeah, it's retraced to the 38% retracement fib. Well, that's amazing. Last time it was the 50. Last time it was the 61. Last time it was the 72. You can, then you get sort
All
of
right,
like.
you see that hammer, that red hammer, about 5 below where you are,
Yeah.
where you were.
Oh,
No,
this one.
come back there. That one.
Yeah.
If you pull it from there, it's a perfect 618 retracement to the next
Right.
hammer.
Right.
Yeah.
Yep. Yep. So
Told
that's
you.
another aspect, isn't it? Yeah. Where'd you pull it from?
Yes.
Yeah. All right, mate. Well,
it's 100% from that one, right?
Yeah. Yeah.
Perfect.
Yeah. And probably from
Brilliant.
the all-time lows, it'd be 50%. I don't know.
Without a doubt.
I mean, this is an astonishing chart when you look at it. This is
yes,
back in,
certainly is.
In 10 years, this has gone from $7 to $264 in 10 years.
Yeah,
I
amazing.
mean, you wouldn't get that sort of return on in the housing market.
Well, around about that time, the guy who was mentoring me said, "Have you heard about this thing called Bitcoin?"
Well, this is Nvidia.
I know it is, but going back, 10 years or so.
Yeah. I see.
As I said, the guy who was mentoring me said,
"Yeah,
I think I'm going to have something to do with this thing called Bitcoin." So, what are you talking about? Never heard of it. And he said, "Yeah, it's something I've been looking at." I said, "Right, okay, I'll leave that alone." What a great decision that was.
Well, absolutely, mate. I mean, 10 years ago, actually 10 years ago, the value wasn't. If you pick the low back, mind you, I mean,
it was $10 or something like that. It was ridiculous.
Let's have a look.
I said, "That's too rich for me."
What a rip-off. What's it now? 2022 now, isn't it? No, 23.
It may well be. Maybe 15 years ago. I can't remember when it was actually.
Yeah. Well,
it wasn't long after I first started trading. To be fair,
this is when
definitely not in the thousands. There's no way it was in the thousands.
Well, at this point, it was $200.
Yeah, it might have been around there somewhere.
Yeah, it was January 2015.
No, it was before that, I think.
Well, before that, it's May 2013. It was $85.
Yeah, it was around there somewhere.
Yeah, which you would have been saying that's a bit expensive.
Yeah,
$85. $85.
Can't afford that. I'm only a learner trader. Give me something. What are we going to do? Have we got a trade?
No, mate. We better wrap her up. We don't have a trade. And my sort of suggestion would be to maybe wait until that date is all passed, because we've got the Bank of England out very, very soon, and we've got the Fed out very, very soon. Sorry, the jobs numbers coming out very, very soon as well. So I think a difficult environment. Possibly if you get your number, if you get your I wouldn't be adverse to taking this beforehand if I get my price. But look at it's pretty quiet. You look at the FTSE, easing to the downside actually, but it's not really taking off. Yeah, it is easing to the downside actually, a little bit of pressure coming into the market. Markets are a little bit negative. But as I say, I just think that when you look at this, the price action could actually be a little bit. I mean, the Nasdaq hasn't moved at all. The price action could be a little bit misleading. Definitely, head and shoulders pattern. So I could understand sort of trying to take on a position here. Jobs data could turn this around pretty quickly though. So at this point, it's probably going to be a buying opportunity again, and we probably ease back higher. So I don't see a trend happening really for the next couple of hours.
Okay, happy days. I'll leave you with one. It may be early. It may be a bit early, but we'll see how we go. I do have a setup on euro dollar, and we do have a target. So we can, I think, place this order. It is euro dollar short. We're going to trade this bar here. Not that fussed on where we put our stop loss because it's not the best. Maybe we should just try a little bit more conservative. What have we got? About 20 pips versus 40 pips. Profit 47. So 1-to-1 to there. If you're going to be conservative, if you're going to be aggressive, you've got 2-to-1 to there. But you got to take profit here, right? Okay. We'll take the position. Because it could be early, I think we'll just go in at, 0.5%, 1/4%, something like that. Don't overdo it. And I'm going to be aggressive. I'm going to put my stop loss above, not this bar, but this bar. So we'll go with an entry at 10890. 1.0890. We'll put our stop loss above that bar, which will be 1.0911. And our take profit pips. If you want to be really aggressive, you could just use the daily pivot as your target. So I think this could reverse. It's not in a reversal situation. Better hurry up here. I'll miss the entry. Take profit pips. I'm going to use that level as get out. 108.54, which gives us 36 pips. Okay, that'll work. 35. That's it. No TP1, no TP2. Just a straight out trade. Disable, disable. I've missed the entry, haven't I? Son of a gun.
Found you.
Oh, we're okay. Right, there's the order.
What I mate?
If you want to follow it, 10890 is the entry. Stop loss is, can't remember, but it's 21 pips, and taking all profit at, there you go, we're in at 35 pips, which is about 1/2 to 1, not quite. Oh, a bit more actually, 1 2/3 to 1. See how that goes. All right, that's it. That's it
Well
for
done,
the week.
buddy.
Mate, have we got a holiday on Monday, or is that down the track somewhere?
Just a bit down the track. Not yet. Coming
right,
up.
Happy days. We've got daylight saving in Australia coming off in 2 weeks, and I think you're 2 weeks after that, or Sunday week actually for us. And I think you're 2 weeks after that. So nothing doing. Everything as normal. So have a great weekend, buddy.
Yeah, you too, mate. Thanks as always for being my trading buddy, and everybody in the room as well.
Absolutely. Have a great weekend, guys, and we look forward to your company on Monday of next week, which will be around about the 26th. So that'll be the end of the month coming up. Yeah, it could be interesting. We've got a few announcements to make. Thanks, Tajul. Thanks for being here. Thanks for being our trading buddy. We'll catch you all next week. Have a good one. Bye-bye for now. See ya.